Hello, IBond fans. I hope you're healthy and well this week. Yes, we are finally back to IBonds for a bit. So, will the May 2023 IBond variable rate be 0%? And what might be the implications for the May 2023 IBond fixed rate? That's what I'll be talking about in today's video. So, as many of the super savers on this channel already know, the inflation numbers for December were released a few weeks back. According to the Bureau of Labor Statistics, CPI-U increased 6.5% for the 12 months ending December. This was the smallest 12-month increase or year-on-year increase since the period ending October 2021. Good news on inflation for all of us. Maybe I can buy some more eggs now, but potentially not really good news for our IBond rate going forward because, well, we now have the data for the last quarter of 2022. We have October CPI-U, November CPI-U, and December CPI-U. We have 3 of the 6 months of CPI-U data since September that we need to calculate the possible IBond variable rate at the next IBond rate reset in May 2023. And CPI-U has been essentially flat overall and even slightly down in some months for the last quarter of 2022, as we can see here. Which of course brings us to the question of whether the May 2023 IBond variable rate will be 0%. And the answer is not necessarily. So what can we learn about the May 2023 IBond variable rate based on the already released CPI-U numbers for the last quarter of 2022? Well, let's travel back in time a bit and see. This column here shows the year. This column shows CPI-U percentage change for the last quarter of the previous year. Basically, like the already released October, November, and December 2022 CPI-U numbers that we already have for 2023. And this column here shows the CPI-U percentage change for the 6 months after the end of the previous September. In a nutshell, where the semi-annual inflation rate, the May IBond variable rate, ended up at for the year in discussion. So for example, for the year 2022, this 1.64% shows the 3-month CPI-U percentage change for the last quarter of 2021. And this 4.81% shows the 6-month CPI-U percentage change between the end of September 2021 and the end of March 2022. This is the famous semi-annual inflation rate, the May IBond variable rate of 4.81%, or in other words, the eventual annualized May 2022 IBond rate of 9.62% that drove so many folks into IBonds last year. And what we can see from this 2022 example is that inflation in the last quarter of 2021, in October, November, December 2021, was slower, significantly slower even, relative to the next 3 months in the first quarter of 2022. In fact, this is the case every year for the 10-year period I looked at between 2012 and 2022. Inflation was always slower in the last quarter of the previous year, every year in the sample period, and then picked up its pace, often substantially, in the first quarter of the new year. This means that the semi-annual inflation rate for the 6 months after the end of the previous September, and therefore the eventual May IBond variable rate, was higher than one would have expected if one had just extrapolated from the inflation numbers for the last quarter of the previous year. Now, you guys know that I like larger sample sizes. Plus, in this case, I also wanted to see how far back this trend went, so I pulled the inflation numbers from all the way back in 1998, the year the IBond was first issued by the US government. This yellow line here shows the CPI-U percentage change for the last quarter of the previous year, every year from 1998 to 2022. And this blue line here shows the CPI-U percentage change for the 6 months after the end of the previous September, from 1998 to 2022. Basically, the semi-annual inflation rate, the eventual May IBond variable rate. And what this graph shows is that in every single year since IBonds were first issued, the pace of inflation increased faster in the first quarter of a new year than it did in the prior 3 months, leading to an eventual semi-annual inflation rate, the May IBond variable rate, that was always higher than what the original October, November, and December numbers would have indicated. Keep in mind that in these two instances where there was temporary deflation and the semi-annual inflation rate was negative, you still would not have lost the principal on your I-bonds because the government will never set the I-bond variable rate below zero. They stop at zero. While there are no guarantees and past performance is not indicative of future returns, as we say in the industry, the past 24 years of inflation data would seem to indicate that inflation in the first 3 months of this year might also pick up and get us to an eventual semi-annual inflation rate, a May IBond variable rate, that should be higher than what we would extrapolate on a straight line basis from the already released inflation numbers from the last quarter of 2022 alone. How high, though, remains to be seen. I'll keep tracking the inflation numbers as they're reported and keep you posted. Now, let's move on to what the implications might be for the May 2023 IBond fixed rate. So no one really seems to know how the Treasury sets the fixed rate for I-bonds. I've seen speculation that ranges from guys in a room picking numbers out of a hat to something that involves a dartboard. Unfortunately, I'm not privy to how the decision on the I-bond fixed rate is actually made either. But I would imagine that it has to be at least a little bit more analytical than that. You guys know I like my charts, so I took a look to see if I could find some sort of correlation with the other inflation-protected bonds that the US government issues, and did some analysis on Treasury inflation-protected securities, TIPS in short, that we've talked about before on this channel. Because while we may not know how the Treasury sets the fixed rate on I-bonds, we do know clearly where the TIPS real rate, the TIPS real yield comes from. We can observe the TIPS real yield given that it's set by market participants every day in auctions and on the secondary market. More on the importance of this TIPS real yield as it relates to this I-bond fixed rate analysis in just a second. So this graph charts the real yield on a 10-year Treasury inflation-protected security, a 10-year TIPS, against the I-bond fixed rate between 2003 and mid-January of this year, after the latest round of inflation numbers were released. For the purposes of this video, all you need to know is that the real yield on a 10-year TIPS is basically the real return on that investment after adjusting for inflation. And in theory, this real TIPS yield is the equivalent of the I-bond fixed rate, and the two should track one another more or less. And in fact, this is the case. Here we can see that whenever there's a significant dip in the real TIPS yield, or worse, when the real TIPS yield falls below zero, a period of falling or 0% I-bond fixed rates also follows. There is a bit of lag time because these real TIPS yields fluctuate daily when the market is open. TIPS can be publicly traded in the secondary market, as I explained earlier, whereas the IBond rate, it's only reset by the Treasury every 6 months in May and November. So based on this recent trend of rising TIPS yields here into positive territory, which does not appear to have been fully factored into the IBond fixed rate yet, remember, the IBond fixed rate was zero for quite a while before the Treasury raised it to 0.4% last November. So based on this recent trend of rising TIPS yields into positive territory, it's my expectation that the IBond fixed rate will also be in positive territory at the May 2023 IBond rate reset date. Whether the IBond fixed rate will be higher than the current 0.4% remains to be seen though. Real TIPS yields have come down a bit recently due to moderating inflation expectations. But based on our analysis of real TIPS yields versus IBond fixed rates over the past 2 decades, and without further information, my current projection is a fixed rate north of 0%. And for those of you who are curious, the overall pattern seems confirmed when we plot the historical real yield on a 5-year TIPS against the IBond fixed rate over that same period as well, as you can see from the green line in the chart. In the case of the 30-year TIPS, the data that I could find only went back as far as 2009 rather than 2003, like on the 5-year and 10-year TIPS. But the pattern holds similarly when we plot the historical real yield of a 30-year TIPS against the IBond fixed rate between 2009 and mid-January 2023. So based on the last quarter of 2022, on the October, November, and December inflation numbers we have so far, plus my analysis of historical CPI-U numbers, IBond rates, and the real yield on tips, as of now, my expectation is that the May 2023 IBond variable rate and the May 2023 IBond fixed rate will be above zero. Of course, what we've learned from the past several years, though, is that things can change pretty quickly. So I wouldn't be surprised if we got surprised, if you know what I mean. So stay tuned for the latest analysis on this channel as more inflation and interest rate numbers roll in over the next few months. And be sure to check out this video here if you're interested in learning more about how tips work and how to buy them. All right, Super Saver, as always, if you enjoyed this video and learned something new, don't forget to share it with those you care about. And of course, hit that thumbs up and see you again very soon with another brand new wealth building video.